What's up, crypto fam? Bitcoin just smashed through $123,000 and you know what that means. Meme coin season is heating up. But here's the thing everyone's missing about Bonk right now. While you've been celebrating Bitcoin's new all-time high, this Solana meme coin just flashed not one but two golden cross patterns that could signal something massive. But wait, there's a catch that 95% of traders aren't seeing, and it could determine whether Bonk rockets to new highs or crashes 25% in the coming days. Stick around because what I'm about to show you about network activity and whale behavior will blow your mind. Let's dive in. Alright, let's set the stage here. Bitcoin just achieved something absolutely incredible. A new record high of $123,218 on July 14th. And whenever Bitcoin goes parabolic like this, you know what happens next. So, as altcoin season kicks into overdrive, meme coins, they go absolutely ballistic. Bonk, being one of the most popular Solana-based meme coins, caught this Bitcoin wave perfectly. We saw aggressive buying that pushed Bonk from oversold levels all the way up to $0.0004075 on July 17th. That's a monster move that had retail traders foaming at the mouth. But here's where it gets interesting, and honestly, this is what separates the pros from the retail crowd. While everyone was celebrating these gains, smart money was already positioning for what comes next. See, meme coins don't just go up in straight lines forever, they're volatile, speculative, and driven by sentiment more than fundamentals. Right now, Bonk is trading at around $0.4034, which represents a 17% pullback from that recent high. And this pullback? It's telling us a story that most traders are completely ignoring. The question isn't whether Bonk caught the Bitcoin rally, it obviously did. The real question is, can it sustain this momentum, or are we about to see a classic meme coin dump that wipes out retail traders who bought the top? Now this is where things get absolutely fascinating, and I want you to pay close attention because this data point could predict Bonk's next major move. You see, while price tells us what happened, network activity tells us what's actually happening behind the scenes. And the numbers I'm about to show you reveal a story that mainstream crypto media isn't talking about. According to sentiment data, and these guys have some of the best on-chain analytics in the space, daily active addresses on the Bonk network peaked at approximately 27,800 on July 16th. That's massive engagement. But here's the kicker. By Tuesday, this number had dropped to an average of 21,200. Now some of you might be thinking, okay, so what? Prices go up and down, activity fluctuates, but you'd be missing the bigger picture here. Daily active addresses is one of the most reliable indicators of genuine demand versus speculative bubbles. When you see sustained high activity, it means real users are transacting, moving funds, and actively engaging with the token. When activity drops while price consolidates, it often signals that the momentum is shifting. But wait, there's more. This isn't just about one metric, it's about understanding market psychology. The peak in network activity on July 16th coincided almost perfectly with the price peak on July 17th. That's not a coincidence, folks. That's smart money distributing to retail while retail thinks they're buying the breakout. And here's the scary part for Bonk holders. If this network activity continues to decline, if we see an extended drop in active addresses over the next week, it could signal that speculative demand is evaporating. And when speculative demand disappears from meme coins, the price action can get ugly fast. Right now, we're at a technical crossroads that could determine the next major move, and I'm seeing signals that most retail traders are completely missing. First, let's talk about support. Bonk has been holding above the $0.403158 level since Friday. That's a critical support zone, and the fact that it's holding tells us that there's still some buying interest at these levels. But, and this is a big but, support levels are only as strong as the volume behind them. Now here's where it gets absolutely wild, and this is the part that could change everything. We've got not one but two golden cross patterns forming on the daily chart. Let me explain why this is potentially massive. The first golden cross happened on July 16th when the 50-day exponential moving average crossed above the 200-day EMA. That's already a significant bullish signal that suggests the medium-term trend is shifting upward. But the second golden cross that's still forming, we're watching the 100-day EMA potentially cross above the 200-day EMA in the coming sessions. If this confirms, we'd have a double golden cross setup, which is extremely rare and, honestly, historically very bullish. Golden crosses don't guarantee profits, but they do signal that institutional algorithms and smart money are starting to position for upward moves. These patterns serve as buy signals for systematic trading strategies, which can create sustained buying pressure. The MACD is also supporting this bullish thesis right now, but here's the catch, and this is crucial. We need to watch for the blue MACD line crossing below the red signal line. We've got three scenarios playing out simultaneously, and understanding these scenarios could be the difference between catching a massive move and getting caught holding bags. Scenario 1, the bull case. If Bonk can reclaim and hold above $0.404075, that yearly high we hit on July 17th, while network activity starts recovering, we could see a continuation of this uptrend. The double golden cross setup would provide technical validation, and with Bitcoin potentially pushing toward $150,000, meme coins could see another massive wave of speculative inflows. In this scenario, Bonk could test new yearly highs, possibly reaching the $0.4045 to $0.4005 range. That would represent another 30 to 45% upside from current levels. The next major support levels to watch would be $0.402580, which is about 25% below current levels, and then the 50-day EMA at $0.402256. A move to these levels would essentially wipe out most of the gains from this Bitcoin-driven rally. What I'm watching right now, daily active addresses really need to stabilize above 22,000. The 100-day EMA golden cross confirmation volume patterns on any break above $0.404075, and of course Bitcoin's continued momentum above $120,000. Risk management is key here. If you're holding Bonk, you might want to consider taking some profits at resistance levels and scaling back in on confirmed breakouts. And if you're looking to enter, it's probably best to wait for either a confirmed breakout above $0.404075 with volume or a test of support around $0.403158. So just remember, meme coins can swing anywhere from 20 to 50% in either direction in just a single day. Position sizing is, honestly, everything. Look, Bonk is at a critical juncture right now. The golden cross patterns are genuinely bullish from a technical perspective, but the declining network activity, well, it definitely raises some red flags about sustainability. This is exactly the kind of setup where retail gets chopped up while smart money makes bank. Seriously, don't be retail. Use this data, respect the technicals, and manage your risk appropriately. So what's your take on Bonk right now? Are you bullish on these golden cross patterns, or are you maybe concerned about the network activity decline? Drop your thoughts in the comments below. I read every single one and honestly love hearing your perspectives. If this analysis helped you understand the Bonk situation better, smash that like button, subscribe for more deep dive crypto analysis, and ring the notification bell so you never miss these crucial market updates. Just a quick reminder, this content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly volatile and speculative. You could lose some or all of your investment. Always do your own research and consult with qualified financial advisors before making investment decisions. I may hold positions in the cryptocurrencies discussed. Past performance does not guarantee future results. Trading cryptocurrencies involves substantial risk of loss and is not suitable for all investors.